And wow, can you believe it's about 10 weeks into the new year already? I don't know about you, but this year feels like it's flying by already. A couple of questions for you. What'd you think of Brian Lebo's and I's discussion about Las Vegas? I think it clearly shows that maybe Vegas isn't going to have the crash that I thought last March it might have. It seems like the powers that be may be able to juggle this a little bit and get us to the other side. It is certainly going to take banks assuming missed payments, putting them on the back end as seconds. But Brian shares in that video that he has had several friends and acquaintances already successfully do that. So, it certainly feels like we're going to get to the other side of this. Banks are going to work with people, unlike the Great Recession, where they just didn't. That's a big, big difference. Having personally invested and seen the carnage created last time. So a lot of fun. In addition, today is Sunday. That means I owe you two videos. One about my weekly goals, and I'm happy to report that students did 3 deals this week. That will go towards contributing to what I call my positive impact score. Really seeing if all the effort we do here on YouTube means anything, right? Are we helping people take that step financially? And this week we had 3 people secure their first or next real estate investment, and that is a huge, huge piece of calculation in my score. So you will see that later today. And then, of course, we do a community kind of wrap up. We give you a taste of what is going on in our private community that is just for students. It is fun to see this positive place, encouragement, asking questions, safe place, and yes, people celebrating deals. So those 2 things will happen today. As for the news this morning, I have a question for you. Let's take a little poll. So the 10-year spiked on Friday to 1.62, I believe. So I'm going to put a poll out there. Do you think the 10-year spikes at some point over the next 5 business days, right, Monday through Friday? Does it spike to over 1.75? Now, to be clear, to play this game, it's just a yes/no answer. Feel free to leave comments below. And again, I mean a spike. It could be for one. It could be for one trade or one moment. It doesn't have to close there. I just wonder what you think. Do you think it continues its rapid rise, again spiking to 1.62? Does it go to 1.75 this week? Or is that just too much too fast? Does the Fed meeting on Wednesday kind of throw cold water on it? Or do you think it drops? So just curious. Let me know what you think. Mike's already voting. Thanks, Mike. Let's see how we do by next Friday. So next up, Jerome Powell speaks on Wednesday. That's going to be a big day. I believe, and I've been prepping you for this for I think 10 days now. I think he's going to announce Operation Twist. I think Operation Twist is important. It's going to be one of the vehicles that the Fed uses to keep the yield curve flatter, which of course means bring the long end down and the short end up. So it is, I think it's a tool that keeps rates lower than they naturally would. I mean, that's the intention. And again, it's amazing to think that Operation Twist has only been used twice in the last 50 years. And I think it's about to be used for a 3rd time. A couple of interesting earnings announcements this week that we need to pay attention to. Nike, FedEx, Dollar General, all for kind of different reasons. Nike to see if, again, their online presence is still winning the day. FedEx, what is going on with shipping, and then Dollar General, right? Where is all the stimulus money going? Are people trading up, trading down? We shall see. Then we have Lennar as well, right? We got a builder announcing. Are they going to talk about inflation of materials? Are they going to talk about lack of labor? Are they going to talk about demand? Are they going to talk about rising rates? Rising rates really hurt builders because they're out 3, 4, 5, 6 months. And these rate rises really can impact buyers. Maybe they get a yes answer at 3%, but a no answer at 3 1/3, for example. So it'll be interesting to see if Lennar talks about any or all of those topics. And then we have another kind of internet software company, CrowdStrike. Do we have the continued beat top, beat bottom, but give weak guidance? That seems to be a theme going on in the market. So we will see if it continues next week. Again, back to the point that I've been sharing for the last 45 days or so, we are right at the end of this dark period, and we are starting to get just good news. For example, TSA screened 1.357 million passengers on Friday. That is big news. Why? Because that is the biggest number in almost a calendar year. They are down 20% from last year, and they're down 38% from 2019. So we're not talking down 70, 80% like we were a year ago. And again, that was just a normal Friday. Nothing special. It wasn't like it was a holiday weekend or something. So again, people are feeling better. They are starting to incrementally travel more, and that is a huge sign. I think that is a huge sign for all kinds of stocks. Call it the reopening trade. Again, I'm talking about a great rotation. Other channels are talking about a big crash. It's hard to see how you have a crash when the market goes up, but whatever. The rotation is real. I think people are going to start traveling. TSA 1.357 million. That means they need a destination. Are they all just staying with friends? Are they all staying at Airbnbs? Do we see hotel occupancy rise? Do we see destinations like Disneyland get more traffic? It again is, for me, just very positive news. Again, it will start slow, but it will trickle, and the momentum is real. Just more bad news for San Francisco. We've talked about Pinterest canceling a 10-year lease. You now have the largest private employer in San Francisco canceling a lease. The largest private employer in San Francisco is Salesforce. Salesforce canceled a lease of about 300,000 square feet. Again, they've said that many of their employees will be working remotely, right, working from home for much of the next year or so. So the Salesforce is canceling yet another lease in San Francisco. It is very clear that the Fed is focused, right? If you may have heard, probably haven't heard in a while, but the Fed is supposed to have a dual mandate, right? They are supposed to look for stable prices and full employment. It is without question that the Fed is looking at really one of those two vehicles in the near term, probably the rest of the year, and that is obviously full employment. The Fed is focused on the fact that we are still down 9.5 million jobs from before the crisis. They are not concerned about inflation. They think it is going to be temporary and based on supply chains. We shall see. That is a huge bet they are making. But that's where they're focused. And now you have a Treasury Secretary in Janet Yellen, who I've indicated before many times. She's a labor economist. As someone who has an econ degree, I can tell you that there's really different key metrics that economists follow, and it really, I don't want to say warps their decision, but it really kind of tailors where they want to go. And Janet Yellen is a labor economist. She thinks everything starts and finishes with employment, and that's what she tracks. So she is going to spend. She has been talking about the government needs to spend big for several weeks now. Most of the articles that I read talked about the 1.9 trillion. I don't think she was talking about that. I think she was setting us up for a $3 or $4 trillion spending package that I'm sure we will hear about in the next 2 or 3 weeks, all around infrastructure. She sees that multi-trillion-dollar infrastructure as being a key leg to the labor problem. Again, not arguing the fact, just realizing that when you come at a problem and the answer is always labor, there's a dark side to that. And if you follow my channel, you know what I follow as an economist, and that is the consumer, right? What is the consumer doing? Are they saving or spending? Are they moving? What's going on? So it is going to be interesting to watch. As for the week ahead, We've got a couple of interesting econ numbers that could be market moving. Starts Monday with China retail sales. I think China retail sales are interesting because they're at least 6, if not 9 months ahead of us. Do we see the revenge buying continue, or are they kind of past that and they're just doing normal things? What is going on there? Uh, Tuesday, you have U.S. retail sales. We had a great number in February. Does that continue? So we shall see. Wednesday, U.S. housing starts, right? Our builders accelerating, slowing. What are they doing? Thursday, of course, is U.S. unemployment claims. For me, do we break below 700,000, right? I think we had a low print last week of 712. It might have been 718, something like that, but lowest print in 52 weeks. Do we break below 700,000? It's still a big number. It's still bad, but we've got to get the trend going in the right direction. And then finally, just because there's a lot of noise around the U.S. 30-year mortgage rate, yes, it is above 3%. The average as of today is 3.05. But let me give you a little context. A year ago, it was 3.36. So we are 31 basis points below that 12 months ago. And the peak was November of 18, at least the peak here recently, and that was 4.94. So again, realize that 3% is still a wonderful rate on a 30-year mortgage. Most of us would say that's probably below inflation. And again, you're going to have it fixed for 3 or 30 years. So yes, you may have missed the bottom. You're not going to get a 30-year with a 2 on it anymore, unless you're paying points and the like. But that's just where we are. So again, exciting day. It's Sunday. I need to do my goals video, do my community video, and I just wish you all the best. Remember, today's a great day to make some money, and let's be better than yesterday. Take care.